Welcome back. Well, housing affordability just dropped to yet another all-time record low based on the latest data we have from Redfin just announced on Friday. So in today's video, I'm going to give you guys an update regarding home prices, home sales, housing inventory, and much, much more based on the latest report from Redfin, which this report is pretty wild here. So let's go ahead and dive right in. I don't want to waste your time, but of course, if you guys are new here, I invite you to subscribe to this channel right now because I post frequent housing market updates based on data so you guys can make a more informed decision about whether to buy or sell a house right now. So let's go ahead and dive right in. This is leading indicators of home buying demand, of course, our housing market. Each of these metrics here I touched on in previous videos, but the only one I did not touch on is this right here, Redfin's Home Buyer Demand Index. This is an index which measures the number of requests for Redfin agents to show houses and also other home buying services from Redfin agents here. It's down 7% compared to 1 year ago. However, though, look at this, down 6% compared to the previous month. And that's for the 4 weeks ended September 24th. Close to its lowest level since January this year. So we're seeing a huge pullback in requests for home showings and also other home buying services, whatever that means. Anyways, just a decrease in home buying demand close to the lowest levels since January. That really says a lot as well, because in January, we tend to see a huge pullback in overall activity in our housing market. To say that we have virtually the same levels right now compared to January is saying a lot, which makes sense given the rapid rise in rates. So let's also talk about home prices first. And this, by the way, is for the 4 weeks ended September 24th of this year, based on 400 plus US metros that Redfin tracks. And their data actually goes back through 2015. So their median sale price nationwide is at $372,500, just under $373,000. That's up by 3.1% compared to 12 months ago. Like Redfin mentions right here though, and also what I've been saying on the channel for quite some time, is that in the second half last year, home prices just fell greatly, whereas this year we are seeing a seasonal decrease in prices, but they're not falling at the same rate we saw last year. That's one reason why prices are still up compared to last year's levels. Meanwhile, the median asking price, this is asking prices of houses being listed for sale, is at $387,000, up by 4.4%, the biggest year-over-year increase since October of 2022. Also, the monthly mortgage payment is at $2,666 per month at the current 7.19% rate. That, by the way, is the current rate 1 week ago, according to Freddie Mac. And rates just announced yesterday by Freddie Mac were at the highest levels since the year of 2000. But when looking at rates at 7.19%, that's an increase of 8.5% year over year and a new all-time record high. So I also want to share some trends regarding prices, but let's just talk about rates very, very quickly here, because I want to share where they're getting this number right here at 7.19%. And why this number, or this average monthly housing payment, will likely look worse next week. So Freddie Mac reported on Thursday, September 28th, that the 30-year fixed rate for people with great credit increased to 7.31%, the highest levels since the year of 2000. So a 23-year high in rates. Last week, we're at 7.19%. So keep in mind, Redfin is looking at the median asking price home and also rates 1 week ago, but rates increased from 7.19% to 7.31%. Therefore, I would imagine that in next week's report, Redfin will announce a new all-time record low for housing affordability, a huge increase in your average monthly housing payment. So here's a chart showing average monthly housing payments since the year of 2020. Right now, we're right here, which of course is much higher compared to last year, up by 8.5%, but just 9-day difference compared to 2021, as well as 2020 at this time. In 2020, your average monthly housing payment was around $1,500 per month. Now it's a whopping $2,666 per month. Back in 2021, it was around $1,600 per month. So to buy a median price home today, you're going to pay around $2,700 per month. But back in 2020, it was only around $1,500 per month. And of course, the increase in your housing payments is really due to the fact that home prices have increased by about, I think it's around 31% since 2020. And of course, rates went from 3%. Now they're at 7+% right now. Speaking of that, I just want to share one more thing regarding rates. I know I talk about it on the channel often, but I just can't get over the fact that we have, multi-decade highs of rates, because that's really going to impact future home prices and also home sales as well. So the average monthly rate so far for the month of September is at 7.20%. We haven't seen rates that high since December of 2000, when the monthly rate back then was at 7.38%. So let's get back to home prices. So the median sale price again increased by 3.1% year over year, which is this orange line right here this year. So what happened in 2022, starting in July, prices tanked through October. Then we saw a more or less seasonal decrease, and also because rates increased to about 7.3% in late October, when to start the year, we're at 3.3%. So because prices, fell off a cliff in the last half last year, even though prices are still coming down ever since July, which is normal, they're not decreasing at the same rates we saw last year. That's one reason why we're still up compared to 2022 right now. Redfin also shared the areas that home prices have increased the most, and also the areas in the United States that have decreased the most. And by the way, there's only 8 metros of the 50 that are down on a year-over-year basis regarding the median sale price. So therefore, 16% of the metros, the 16% of the 50 most populous metros, I should say, are down, whereas 84% are actually up on a year-over-year basis. The biggest increase was actually in Anaheim, California, up by 14.2%. Then we had San Jose, Fort Lauderdale, Florida, up by 10.5%, New Brunswick, New Jersey, and also Newark, New Jersey as well, 9.8% increase. I'm wondering what happened in Miami, Florida, because Miami, Florida, if I'm not mistaken, was at the top spot last week. I want to make sure I'm giving you the right information though. So I actually did some research just now, because here's the Redfin report from 1 week ago. And there you go. 1 week ago, Miami, Florida was the biggest increase for the 50 most populous metros, up by 14.4%. Whereas 1 week later, they're not even in the top 5. So I don't know what's going on with Miami, Florida. If you guys know, please leave me a comment below. I'm wondering if there's some kind of error that's kind of skewing the results in Miami, Florida. Maybe there's some sort of outage, for example. I don't know, but it just doesn't make sense to me that they're 1 week ago, they're up by 14.4%. And now they're actually less than 9% or less than 9.8%, not even the top 5 here. Anyways, let's just move on. So the metros that recorded the biggest decrease, again, only 8 are down. Austin, Texas, again, led the nation with the biggest decrease year over year, down by 4.4%. Then we had Houston, Texas, San Antonio, Texas, Fort Worth, Texas, Las Vegas, Phoenix, Nashville, and Dallas, Texas. It's interesting to see here that the top 4 markets that are down the most compared to 12 months ago are located in Texas. In any case, let's move on and talk about pending home sales, new listings, as well as housing inventory here. So pending home sales, a measure of contracts being signed between buyers and sellers of existing houses, excluding new home construction, decreased by 13% year over year. New listings also fell as well, but only decreased by 6.1%. That 6.1% decrease was the smallest decline in over a year, in part because new listings were falling at a much faster clip in the last half of last year compared to this year. This is exactly what I mean by this, because the decrease of 6.1% is right here. The orange line, the red line is 2022. The green line is 2020, and the blue grayish line here, not green, I guess I would call it blue, is 2021. In any case, look what happened last year. New listings just absolutely plummeted in the second half last year, really starting in July. Whereas this year, we are still kind of going down, but haven't gone down at the same rate last year. And I've been telling you guys that I would imagine that the number of new listings will actually be positive very, very soon because they were falling much faster last year than this year. And therefore, because of this, we're seeing fewer metros that are down compared to 1 year ago. So some areas are actually up compared to a year ago, which is night and day difference compared to several months I was reporting how the number of pending home sales as well as the number of new listings were down on a year-over-year basis for each of the 50 most populous metros. Now we're seeing some changes here, and let me share that with you right now. So the number of new listings decreased in every single one of the metros except for 10. In other words, there's 10 metros that recorded an increase year over year in the number of new listings. Again, for several months, I was reporting to you guys how new listings were down for every single of the 50 most populous metros. Now we actually have 10 that are actually up. Leading the nation was San Jose, up by 7.2%. Then we had West Palm Beach, Florida, a gain of 4.1. Miami, Florida, Cleveland, San Antonio, Texas, Cincinnati, Minneapolis, Pittsburgh, Houston, and Fort Lauderdale, Florida. In contrast, the areas that decreased the most in the number of new listings were Atlanta, Georgia, falling big time. Look at that, down by 30% year over year. Las Vegas is down by 18%. Then we had Riverside, California, Portland, Oregon, and Newark, New Jersey. In contrast, out of the 50 biggest cities here, every single one of them recorded a decrease of pending home sales. In fact, New York fell the most, down by 36%. Then we had New Brunswick, New Jersey, Atlanta, Georgia, Providence, Rhode Island, and Seattle, Washington. Let's also have a look at the number of active listings or the number of houses for sale nationwide, because that decreased by 15.3% year over year, which has been virtually flat right now, which is highly unusual. We should have seen inventory start to decrease in August here, but inventory levels has been relatively flat ever since July. Highly unusual. Obviously, much different than what happened last year, where inventory levels were spiking from May all the way until we hit August here. So to me, this is pretty wild to see that inventory levels is relatively flat, even though the number of new listings have been falling compared to 1 year ago for over a year now. But the reason for this is really due to that houses are selling longer or taking longer to sell, and we're seeing fewer contracts being signed between buyers and sellers, and that is making it look like inventory is higher right now. Or I should say, this is one reason why inventory is not going down like it normally does this time of year due to seasonality. Let's also discuss the month supply nationwide right now, because the month supply is at 3.2 months. Fairly low levels right now, but the highest levels we've had going back to February this year. As you can see right here, 3.2 months, the highest level since approximately February this year. This, by the way, is slightly higher compared to 1 year ago. The month supply 1 year ago was around 3.1 months, but back in 2021, though, it was very, very low at under 2.5 months, at about 2.2 months to be exact. Let's also have a look at how fast or how slow houses are selling nationwide, because days in the market is at 31 days. This is the time frame when a home gets listed for sale until they accept an offer by a home buyer. So on average, or I should say the median days in the market is at 31 days, a little bit below last year's levels, but higher compared to 2021, yet still lower than 2020. So for example, back in 2020 at this time, days in the market was around 37 days. Now it's at 31 days. And lastly, let's have a look at the average sale price to final list price ratio. That ratio is at 99.4%, which means over the past 1 month for the houses that did actually close, the home seller sold their houses for about 0.6% below their final list price. This is roughly higher, or I should say a little bit higher compared to 2020, as well as 2022, when back then the ratio was just over 99%. This is much lower, though, compared to the highs we saw back in May 2022, when the housing market was just absolutely on fire. I never seen anything like that. Anyways, back then on a national level, houses were selling for about 2.5% over asking. Now they're selling for slightly under the asking price. But I would love to hear from you guys. What's your biggest takeaway from today's video? Thank you so much for watching today's video. I appreciate you and hope you have an awesome day. And I'll see you on the next video.